Okay, now we're going to take a look at the payroll, how it picks up the process in determining how to compensate the employees for both their regular and H&W earnings. At this point, the labor batch has been posted, so we know what the employees have earned both in their regular and H&W. And we also know, based on the benefits module, what the actual costs are for those benefits through their activities and open enrollment, onboarding, life events, that sort of thing, where the benefits change and what the costs are. So when we calculate the payroll, the first thing that's going to happen is it's going to look at the labor module and determine what labor needs to be pulled into this process based on the employee cycles that they belong to, their frequency, and the end date. So when that calculates, it pulls the labor in, and then it's also looking at the benefits engine to determine what the employee costs are associated with those benefits and deductions. So all that's pulled together. The challenge with payroll at this point is the amount the employees earn in their for health and welfare almost never matches up with the amount of their cost of those benefits. So the payroll needs to determine what to do with those, either those additional amounts or the shortages when they don't cover the amount of their benefits. Uh, these can all be set up rule-based within the system so that when you're just calculating, it's automatically figuring all this out based on your rules. So we'll go ahead and calculate the payroll, pulling in the labor, pulling in the benefits, and we've calculated our 3 employees that we had in labor. So if I go to David here, David is kind of the easiest example of a rule set. David basically, whenever he gets paid for health and welfare, if he has an additional amount, he has more than his cost, he has additional net pay. So he's just being paid in cash for any differences when he makes more money than his cost. On the other hand, looking back at his first check, he made $150 worth of health and welfare that came in, and he only had $140 worth of cost, so he ended up with an increase on his net pay. So he basically covers his differences and then gets the additional money whenever he makes more. And it's kind of considered a straight cash health and welfare employee. Our next example is Brendan. Now, Brendan is similar to David in that if he doesn't make enough money to cover his health and welfare deductions, he ends up paying it out of his regular earnings and it decreases his net pay. However, if he makes more money, instead of him getting just cash, he ends up getting additional benefits. And in this case, he signed up for additional 401k, a non-contrib amount going to a 401k plan. He could be signed up for something like HSA, or he could be split between multiple ways. He wants his excess going to different benefits. And that's what happened on his first check, is he made $235 worth of health and welfare against his $195 worth of benefits. And so he ended up having $40.33 that went to his 401k non-contrib plan. All right. The third example I have to show today is Sylvia. Now, her plan calls for both the 401, similar to the last plan, that anything she makes in excess of her cost of her benefits is going to go to her 401k non-contrib. However, if she doesn't make enough money to cover those costs, it's not coming out of her earnings. It's becoming an additional expense to the company. So instead of having it as a deduction, it is strictly coming out as her employer cost, and that's going against her how much she's made in health and welfare. So in this case, she made more money than the sum of her cost for health and welfare, so she ends up getting an additional $56 that's going to her non-contrib 401k. Now, if we look at her previous check, on this particular check, she only made $100 of health and welfare and didn't cover, she was short $20 of what she signed up for in her benefits. So that $20 needs to go somewhere. And when we ran labor, from a labor perspective, we thought we only had $100 of health and welfare cost associated with Sylvia for that for this payroll, when in actuality we had an additional $20 of expense. So an additional line gets created in her check to account for this and puts the $20, which then when we update the general ledger, when we create the general ledger batch, it's going to put an additional $20 of an expense to the fringe expense for that job. So we're accounting for the fact that we had more expenses than we originally thought we did. Some clients will that's just additional expense on the project. Others look for when the employee does have additional earnings, if they had a deficit in a previous payroll, they want to go ahead and pull those earnings back. So the system could see that she had the $20 and automatically do this. I have this one set up as where it just becomes an expense. However, if we wanted to go ahead and add that in, some clients do it as a manual where they decide when it comes out and when it doesn't. We could add that expense to the employee. So now I'm going to take that $20 and I'm going to reduce my expense based on the fact that now she can cover for where she was before. So I'm going to save that. And since I just want to recalculate this one employee, I can go ahead and calculate it right on the check query screen. So now we're seeing that the expense to the fringe benefit expense is being reduced by $20, and that'll flow through the general ledger. In addition, we've also reduced the amount that we're putting to her 401k by that $20. So it includes it in the cost of the rest of the benefits and reduces her amount that's going to her fringe benefit. These are kind of the basic ways that most clients handle the health and welfare, the different scenarios. They can become more complicated in that some of those rules become combined, where some of the deductions, if they can't cover the cost, become actual deductions out of the employee's net earning, out of their earnings, where a different set of deductions for the same employee may just stay employer cost and not be deducted. There's a lot of different ways that these rules can be combined. And if you notice, we had 3 employees in this cycle that all have different rules. So it could be based on their employee setup. It could be based on different ways of setting the employee up to determine which plans they fall into, whether they're in the union in one group or in a different union in a different, and are working on different agreements. So there's a lot of flexibility in being able to set this up and automate from a payroll perspective of how we compensate the employees for these earnings. All of this is then clearly shown to the employee on their pay stub so that they can see all of their earnings of how they came in, if they had additional rates, if they had multiple rates on different types of earnings, multiple rates on their health and welfare. That's all detailed out on the check, as well as they can be able to see their total of their health and welfare earnings and have clear visibility as to why they got paid. And that's kind of the payroll process there of how we handle the health and welfare on payroll.